everyone, this is Marshall Gittler bringing you the morning comment for October 7th. Well, following the better-than-expected non-farm payrolls on Friday, you might have expected the dollar to rise. You might also have expected the biggest drop in German factory orders since 2008 to send the euro down. But no. In fact, the dollar fell against all its G10 counterparts and almost all the emerging market currencies that we track. It seems to fit the pattern of the movement on non-farm payroll days reversing the following Monday. Maybe it was a reversal of Friday's movement in the U.S. fixed income markets. I can only think that after 13 straight weeks of buying dollars, people took the good non-farm payrolls figure as a signal for profit-taking. The U.S. currency may take a breather from here temporarily, but I wouldn't expect the trend to change. Now, overnight, the Reserve Bank of Australia kept rates unchanged at its meeting, as was universally expected. It also softened its tone about the Australian dollar. It dropped the line about the Australian dollar being overvalued and went back to saying just that it, quote, remains high by historical standards, unquote. This suggests they're less concerned about the level of the currency than before, in contrast to the Reserve Bank of New Zealand, which is still complaining bitterly about their exchange rate. So I'd expect Aussie Kiwi to rise from here. The Bank of Japan kept its policy unchanged, as was also universally expected. According to Bloomberg, the majority of the Bank of Japan Policy Board members favored dropping the 2-year deadline for meeting their 2% inflation target. On the one hand, this would mean that they'd keep policy loose indefinitely until they did meet the target. That would be negative for the yen, as it would make the yen the world's favorite carry trade currency. On the other hand, it would eliminate the need to increase the stimulus as the deadline approached, which would be positive for the yen. Personally, I think the market has it in mind to sell the yen, and whatever happens will be interpreted negatively for the currency. As for today's indicators, during the European day, we get industrial production figures for August from Germany, Norway, and the UK. The German figure fell by more than expected, confirming the weakness in what's supposed to be the driving force of the Eurozone economy. No forecast is available for Norway. In the UK, the figure is expected to remain unchanged from July. From Canada, building permits for August are expected to fall, a turnaround from July. In the U.S., the only indicator we get is the Job Opening and Labor Turnover Survey, the JOLTS report, for August. The forecast is for the number of job openings to increase marginally. While this indicator isn't particularly market affecting, it does add to the positive data from the employment report released on Friday. We have two Fed speakers on the agenda for today: Minneapolis Fed President Kocherlakota, who's a big dove, and New York Fed President Dudley, who's a little dove. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.